Glad to know you stay with us. The 2026 West Africa Economic Outlook presents a cautiously optimistic picture for the region as macroeconomic conditions begin to stabilize after years of reform and adjustment. Inflation is expected to ease, currencies are settling into a new equilibrium, and growth is expected to remain resilient, supported by domestic demand and a surge in energy investments, particularly in Senegal and Niger. Nigeria is forecast to record stronger growth driven by services and improved policy transparency, while Ghana's recovery is set to deepen alongside expected monetary easing. Well, these and many more are some of the things we will be talking about right now. And joining me for this conversation is Akolawole Odunlami, Associate Director, PwC. Thank you, Akolawole, for joining me today.
Thank you for having me. It's a pleasure to be with you as always.
Thank you. Now, let's start with the bigger picture. Give us an overview of growth in West Africa. What's your projection?
Yes, like you've rightly said, we expect the region to continue on its growth trajectory. We are projecting 4.2% growth for West Africa, largely driven by some of the reforms you've seen in Nigeria and Ghana as these reforms begin to yield results. We are also seeing increased production, increased productivity, particularly on the side of gas and oil in Nigeria, and same with Ghana. Of course, a little bit of caution needs to be exercised as you project, looking at some of the countries in the region faced with some level of instability, like Niger and a couple of others. But generally, we expect stronger growth coming from the region. Growth, but a bit moderated, if I may say. Our projection is that 2025, the region ended at 4.4%. We're projecting 2026, that growth will moderate slightly to 4.2% for the West African region.
Interesting. Let's take a look at Nigeria now. I mean, it recorded 3.98% in Q3 2025. Looking at 2026, what do you see and what are the growth drivers?
We see, quite interesting times for Nigeria in 2026. Like we've always said, we've gone through the period of economic reset, and we are enjoying largely economic stability in Nigeria now. And that stability is expected to further drive growth, and growth projected in Nigeria. And the stability should drive growth on one hand. Number two is key sectors like ICT, key sectors like financial services are expected to drive growth further. The energy sector is going to play quite a crucial role in the growth trajectory of Nigeria, with increased domestic refining and increased investment coming into the upstream oil and gas sector. Of course, the downstream sector still finding its footing, given the, the reshaping of the sector, right? But largely positive for Nigeria, as we see, and we are seeing a growth trajectory of 4.68 for Nigeria in 2026.
4.68. Is it that quite, ambitious?
Well, it is ambitious, but you would notice that even international agencies like the World Bank have revised their projection for Nigeria to well above 4%, right? And the drivers, again, of the growth is, as you see, the stability is going to drive investment, right? And let me say that stability itself is not economic growth, right? Stability can drive growth. We expect stability to drive investment. Investment drives productivity, right, which is output, right? Productivity drives job creation, drives household income, drives, consumer spending and all. So we believe that the growth projection is moderate.
Interesting. I want us to do a quick comparison between Ghana and Nigeria. Ghana did 5.5 in Q3, and that can be attributed to strong performances in agriculture. Do you see Ghana outpacing Nigeria in 2026? And, you know, while you were talking about growth sectors or growth areas for Nigeria, you mentioned ICT, you mentioned financial services. You know, I didn't see agriculture there. And I'm wondering, because I feel that if we can deepen agriculture, maybe we'll get more, maybe even outpace Ghana. What do you think?
Well, yes, absolutely. Agricultural sector, first of all, there are bottlenecks that need to be resolved, right? Bottlenecks around security, bottlenecks around, you know, farmer-herdsman conflict. If those bottlenecks can be resolved, agriculture is going to be potentially a big driver of growth. But there are also issues around pricing, local production versus imported food. Right, and the farmers, of course, while the consumers are happy that food cost is going down in the market, farmers, domestic farmers, right, are not quite pleased with the level of importation, which is not making it exactly good for them to compete, right, or for them to produce, because they cannot sell, particularly some staples like rice and like wheat. Other products are not doing badly exactly. So agriculture definitely, because still in the rural areas, agriculture is still a big employer of rural labor, right? And so agriculture needs to be incentivized to grow and to also be a contributor to growth. On your second question about Ghana and Nigeria, it's always an exciting question to answer. Ghana has been doing well on the back of reforms. Right, but of course we've seen, you know, some of the conversations they've had with Afrexim, refinancing and restructuring some of their debts, and what the impact of that could be on their economy. But generally, we expect Ghana also to do decently well in 2026.
Mr. Odunlami, I'm afraid I need to butt in right now because we need to go on a very quick commercial timeout. When we come back, we'll continue with the conversation. Stay with us. Thank you for staying with us. Akolawole Odunlami is with me, and we've been looking at growth projection for the year 2026. We started with West Africa, and now we're sort of narrowing it down to Nigeria. Thank you so much for staying with me, Akolawole.
Thank you.
Now, before we went on that time out, you were trying to explain, you know, the difference between Nigeria and Ghana, and how that Ghana is already talking about restructuring and refinancing, you know, things in that regard. Please take it up from there.
Yeah, thank you. And if I may just read out the numbers again, Nigeria is expected to grow at 4.3 percent, and Ghana is expected to grow at 4.8% in 2026. On the Nigerian side, like I mentioned, growth is expected to be largely driven, or most of the growth we saw in 2025 actually were driven by the ICT, financial services sectors. In Nigeria for 2026, we expect growth to still be driven by those sectors, but with the energy sector playing a very crucial role in growth. And of course, on the government side, a lot of spending going into infrastructure is also expected to stimulate growth and further growth. Same with Ghana, right? Ghana is expected to grow at 4.8%, driven largely by government spending anchored on critical sectors, you know, like exports, critical sectors like energy in Ghana. Yes, I talked about the refinancing of Ghana's loans. Refinancing itself is not a bad thing. Countries do restructure, countries do refinance, as it were. Sometimes you are refinancing if there is a possibility of going for lower interest rates. And I must say, particularly for the region, as we are on the watch for what happens in the United States government has consistently called for a drop in the rates by the Feds, and that may likely happen as the Fed leadership changes. And if that changes, of course, it's good news for West Africa, because when the rates drop, it means that the interest rates, the rates of borrowing drops, and it gives room for further refinancing, further restructuring of our debt burden. And that, of course, is good news because if you look at the budget for 2026 for Nigeria, you would find that about 41% of the budget of revenue, I beg your pardon, 42.5% of revenue is expected to go into debt financing, and the budget has a deficit of 41%. And so the cheaper we can grow, the cheaper we can borrow, rather, the better for us.
Well, the cheaper we can borrow, the better for us, but we know that the debt burden is rising, and we might get to that point where we'll also begin to do what Ghana is doing now. I don't even know how long it will take us to get there, but of course, that's what it is. Thank you so much for sharing your thoughts with us on the show today. Akolawole Odunlami, Associate Director, PwC.
Thank you very much for having me.